Futures are up, but they're not up like they were. The major averages are having a tough August. The Dow just hit its worst week since March. Joining us now, Katie Stockton, founder and managing partner at Fairlead Strategies and a CNBC contributor. I don't know, maybe we should talk about bonds instead and yields and what those are indicating to you, because they seem to be the dog and the stock market seems to be the tail right now.
Well, they've really accelerated to the upside, such that the 10-year yields are now up into resistance at 434. It would be a natural place for a pullback or some digestion. And
indigestion.
Yeah, exactly. When we look at Treasury bond benchmarks like a TLT, for example, to me, it still feels like it's range-bound, that support will hold for some time. And yet, eventually, like if we do see 10-year yields clear that 434, the next resistance on the chart, which is the best way we have to understand upside, is about 5.25. And that wouldn't be a near-term objective. That reaction I get all the time.
I know, but
check, please.
Right, but from people, I was so used to 7 and 8%. I'm not afraid of that eventually. I guess
a lot
companies
of people are, though. Yeah.
I know they are, but companies did just fine with yields like that. But that would be a shock to the system.
I think it would be. And we're seeing some deterioration in the equities, but it's not really that meaningful yet. So to me, I think we see this corrective phase as just that, a corrective phase, something that should yield a buying opportunity. It comes at a very normal sort of seasonal time for this kind of volatility.
Right.
And, the long-term momentum has gradually shifted to the upside this year. So I think we'll at least have an opportunity to take advantage of that sometime during Q4, even if it's not long-lived.
Go ahead.
What about the momentum in mega cap and potentially losing that, right? It's obviously been edgy the past couple of weeks. Now we have NVIDIA looming. So how do you see all of that?
That has the potential, obviously, to set the tone near term. What we have seen behind the NASDAQ 100, which, of course, is driven by the mega caps, is a loss of intermediate-term momentum, not just short-term momentum. So the gauge that we track had been positive since about mid-November, and it just flipped negative last week. So we publicize that because it is significant. And it tells us that the corrective phase should be more than just a couple 3-week event, something that would be more in this sort of 6 to 8 week range. So it gives us a sense of time frame around the corrective phase. But listen, I mean, we've come so far, and not so fast, but for so long, that it would be only natural to see this kind of action.
I don't know which average we should talk about it, but we always do the S&P. So the 3,600 October lows, or whatever they were, those we aren't talking about anymore. What's the first solid support underneath the S&P right now?
We're referencing for the S&P 500 former resistance from February in part, which is around 4195, just shy of 4200. And I think a lot of people have that 4200 level in mind, and because of that, in a way, it could become self-fulfilling as support. So that's what we use to gauge downside risk, but it's really a setup in our indicators that we use to cue the entry point or the re-entry point. Right now, the indicators, as you can imagine, are still pointing lower. And there's still a good deal of room to not short-term reversal territory. We're already there now today, but intermediate-term reversal.
So non-correlated Bitcoin is totally correlated.
Well,
you thought 25 was pretty good support.
Right. So 25,200 was, again, sort of former resistance.
25.2?
Below that, I don't want to say the bottom drops out for Bitcoin, but the next support is below 21,000. So to me, that would be a setback, and I would suggest that risk appetite is really just not there.
For the stock market as well.
Yeah. I do still see it's not a 1-for-1 correlation, but it does give you a sense of how people are feeling.
Okay.
And look at China too. China, Shanghai Composite is near its lowest level of the year.